quick, but you guys feel free to talk amongst yourselves for a second while I get the PowerPoint set up. On another completely unrelated note, has anybody else tried Claude Cowork?
No, I've used Claude. What's Claude Cowork?
So it's like this, it's basically like their built-in AI agent, and you download it on your computer and you can set up like I can say like every morning at 8 o'clock, send me an email that has like a summary of all my emails that I haven't responded to and my appointments for the day, for example. And you can give it access to your stuff and it can go in and do that. Um,
Whoa. So
I'm only touching the surface, but you can also do stuff from your phone on your computer. So I literally just downloaded it yesterday, but my cousin was talking about it last week, and it's pretty robust and works pretty well so far. So I know this isn't a class about AI, but I would
hold
highly recommend looking into it
I
if
thought
you're
I joined the
interested in
wrong
this.
meet at first.
So you have Claude, just regular Claude for your like,
Yeah, so it's basically if you go into Claude, you'll see Claude Cowork as an option along the top, and you just download it onto your computer, and then you have to give it access to like your Gmail, and you can give it access to your Chrome tabs, and it can go in and pull information. Like I have Android, as you guys know, so they have a web-based app that I can text from. And now I can give Claude access to my text messages so it can go in and search all of those and give me like insights in a way that is
wow.
difficult to do with just the normal search.
Could you
So,
ask Claude that since you have an Android, when you're in a group chat with Apple users, if we could see your photos and emojis?
yeah, you can turn on RCS chat
Oh.
in your options, but since Apple hates everyone else, they
Hmm.
default it to be off so that you
Oh.
can then make fun of Android owners for having poor technology, even though Apple has just been abusing you for years so bad that you don't even realize it.
Touche.
Anyways, all right, I we could go back and forth for a while. It's my favorite pastime, Apple versus Android. Now that Heather started the recording 3 minutes ago and we've accomplished nothing. All right, let's jump into real estate. All right. I think most of you guys know me, so I'm going to skip that. Today we're going to go over market trends. I've got some cool info. I think actually I know I do because I have some new stuff. So we'll be going over with regards to interest rates, consumer confidence levels, and then inventory and selling trends. Within Central Ohio, I feel like I've been promising this for a couple months and I kept forgetting, but I did look at new construction versus resale in the suburbs. So there's some interesting stuff there. And then showing trends is also some interesting stuff, which you guys have kind of anecdotally shared, but I've got data to back up your anecdotal experience. So, um, for those of you that jump on, I mean, I've had this slide in here forever, so sorry that if you come every month. But ultimately, none of you are probably going to memorize everything I say. I don't do this with the expectation of that. But what I really want you to do is to take away a couple things. I'm going to point those couple things out that I feel like are the most useful when you're talking to buyers and sellers right now, but ultimately just know one or two things really well. and you're going to put yourself way ahead of the curve when it comes to other agents because unfortunately, our industry isn't always known as the most professional and well prepared industry around. And so some of your competition, actually a lot of your competition, probably doesn't know any of this. So just make sure you can speak intelligently on a couple things, and I think you set yourself apart. All right, starting with mortgage rates. I'm probably not telling, hopefully not telling anybody on this call anything they didn't already know. But after trending like downward since basically a year ago, we've definitely saw an increase since the start of the Iran war. My next slide kind of shows a little bit more with that. We saw kind of a little bit of a drop off for the first time last week. But then it's been pretty flat and kind of slightly up actually ever since. I think I just got an alert like 30 minutes ago that it's up like 1/100th of a percent. But basically overall fairly flat after dropping last week, but still well above where we were at the beginning of March before all of this started. So I would say that, your biggest indicator on mortgage rates is going to be a drop in oil prices. And the biggest reason why that's important is because higher oil means likely higher inflation. So if you want to go to that next level, that would be the reason. I actually used Claude this morning to build this graph. So I asked it to plot um, crude oil prices over the last 90 days and compare it to interest rates from Mortgage News Daily. And this is what it came up with. I did not check every data point, so hopefully it pulled it correctly. But you can see that really from the start of the war, um, they kind of went up in tandem, but then the rates peaked on March 27th and have kind of like dipped back off of the highs, whereas oil has really kind of slowly trended upwards. There was a small drop last week when people got all excited about the peace talks that really I don't think anyone believed were actually going to result in anything, but they got excited about it. And so they dropped a little bit, but I think they're pretty much back up. I think we're back up a little over $100 a barrel today. Um, so yeah, so long story short, interest rates definitely rose because of it, but they've kind of plateaued. The only thing that makes sense for me here is that basically everybody kind of feels like there's going to be an impact on inflation, but it's not going to be like unlimited, meaning we don't need to like freak out that the sky is falling and inflation's going back to 10%. And so my guess is that they've kind of feel like they've priced in what the expected inflation is. I think if this continues to go on for another month or two, we'll probably see rates bump up a little bit more. Again, due to the expectation for future inflation. Unfortunately, consumer confidence overall has dropped as a result of the conflict as well. And then that's again largely connected to their expectations for prices. So you can see the month over month changes here. Actually, I can get my little laser pointer out. You can see the month over month changes here across the board when it comes to consumer sentiment. How do you feel about current economic conditions? The index of consumer expectations, basically everything is down about 10 to 11%. Not surprising, really. And then they also believe that prices are going to go up actually quite a bit more in the next year compared to what they thought just a month ago. So, again, I always take this stuff with a grain of salt to a degree because it is largely based on the headlines. And the reality is the overarching conversation, if you're only a headline reader, which I think most people are when it comes to this kind of stuff, has definitely been higher oil prices equal higher inflation across the board. And we'll see how it's definitely true. There's no doubt about it, but we'll see how much it's going to cause it to increase over the next couple months. So again, trends are in the wrong direction, unfortunately, after seeing a couple months of things moving in the positive direction. Remember, just like with real estate, a lot of the surveys that are being published now are really data from a month ago. And so obviously a month ago was like the meat of the conflict and the meat of the fear around oil prices. I think oil prices as a whole, like I said, if we go back to this chart here, you can see that it jumped a lot at the beginning of March, and then it's like kind of just slowly been moving up. And so, a lot of these surveys were probably done towards the middle of March, which is coming off of this huge increase. So I think next month will probably be a better gauge of like where people really are. But these are short run expectations. Again, this is like almost all just based on news media reports, which again have not been positive when it comes to inflation. So, um, these are like year ahead inflation expectations. You can see this little increase. But then this is the percentage of people that are blaming high prices for poor personal finance, which jumped quite a bit this month. So all right, active listings. Active listings are up nationally 8.1%, but to put it into perspective, it's still 14% below pre-pandemic normals. And we've also kind of like the increase that we had been seeing year over year over the last couple years has kind of slowed down. Like it was in high double digits. I think we were in like the 20s and maybe 30% increases, like from these numbers down here to get up to here. And now we're starting to see like this is the 2025 trend line. We're like kind of following that without nearly as much of an increase. New listings are the same. Actually, those are only up 0.7% year over year. Um, Out of curiosity, I'm just going to stop here for 1 second and do like a quick poll. Did anybody have a listing? I asked this last month and I think the answer was zero. Has anybody had a listing that delayed due to fear of the economy or the war or gas prices or anything like that, where somebody like truly made a decision to not list their house out of fear for that?
I haven't.
Uh, Obviously, people took too long to paint and things like that. Those delays have happened for sure. But anybody? Okay, cool. That's what I've experienced as well. Like I don't even think a lot of this stuff has even come up in conversations with clients. I'm sure it's happening behind the scenes. But just curious on whether you guys were seeing it specifically cited as a reason to not um, do business. Pending sales up again. Um, this is our this is our third month in a row where nationally pending sales were up year over year. So we saw that one time in like late 2024, but other than that, it's been since really 2021. So we'll be looking for this trend line. The predictions at the beginning of the year were definitely that sales were going to increase. So it'll be interesting to see what happens as we move into this month and then certainly May. By June 1st, we'll have a good feel as to where we're headed for the year. Days on market +4 over last year. Not anything to write home about, in my opinion. This contract cancellations, for some reason, they didn't publish it this month. So sorry about that, but I want to keep it in here because I do want to make sure this makes it in when we have it. Median list price is down 2.2% nationally, which when we get into the local stuff, we have not seen that same data, but we have definitely started to see things flatten out locally as well. Um, the biggest thing I'll say here, and I'll repeat it again when we talk about local, be very, very careful making assumptions about year over year appreciation, meaning like just because something sold for 450 last year that you should list it at 475 this year. You should be, and actually, what I would be doing from a pricing perspective is actually going back and taking seasonality out of it. So you always have to pay attention to the last 6 months of sales because that's what appraisers pay attention to, right? I always tell clients, you have two prices. You have what an appraiser says a property's worth, and you have what a buyer says a property's worth. And sometimes there can be quite a gap between those two. But what I would recommend when you're pricing in this type of a market is go back to last spring and look at what similar homes were pricing for and selling for last spring versus trying to figure out how to compare October, which we could all agree was probably a buyer's market, to April of this year, which I think we're probably all agreeing is more of a seller's market, right? Um, and so just be careful using October pricing, because in many instances it's actually softer than last spring. So, all right, number of price cuts are elevated over the norm still, but less than last year. So again, I think there's two things that come from that. That's also true locally. I think there's two things that come from that. One, sellers are becoming more realistic, like they aren't as high in the sky as they were over the couple years. They're always very slow to come to that realization. But after a very slow fall, I think sellers are a little bit more realistic. But also, I think sellers are, especially when we look at the national picture, agents are setting better expectations that houses aren't going to sell immediately, and therefore the seller isn't wanting to reduce the price after 1 week of not getting an offer, right? And so the percentage of listings that have been reduced is a little bit less than it was last year. All right, regionally, this I thought this was actually a little bit more interesting than it has been over the last, I feel like, while. The Northeast had been like really leading the pack in terms of like staying doing pretty well pricing wise and inventory wise. Um, they are down 3.6% on median list price. The Midwest leading the pack again, just barely below even. When you look at year over year median list price. Median list price per square foot is actually up, and then the South and the West continue to be not so great. But median days on market increase relatively nominal in my opinion. And then the price reduced share, you can see that the West and the South are definitely quite a bit higher than the other ones. So, all right, what's happening in Columbus? This is looking at our total market. So this includes new construction and resale over the last 15 months. Um, Fairly healthy. We're continuing to see, the new listings coming at the right time. The one thing that probably we should take away from this graph most is how close these lines are. So what that's telling me is that this stuff, the actives that are sitting on the market, nobody wants. But the stuff that's coming on the market, that's new, fresh inventory, is getting eaten up very quickly. So you see our actives are about the same from February to March, but you can see that the pendings are up in almost a perfect line with the new listings. And the reason why that's important is because I think that we're going to stop. If that continues, we will not see this big gap that see how this is not going to look very good, but I'm going to do it anyways. Um, if we look at last year, you can see March how there was this gap. There were a lot more new listings than there were new pendings. So whenever you have a gap between the number of new listings and new pendings, you would expect that the following months, the number of available listings, which is this, will continue to go up, right? But when you're pending every new listing, you're going to start to see this like horizontal movement of the active properties. So for the last several years, we've been seeing the number of active properties each month going up. And the reason why that's important is because we're pending most of the new listings with 6.25% interest rates. If we see this whole thing settle down, which no matter what you believe about any politician, there's a midterm election coming up, and I can promise you that one way or the other, this thing is going to settle down. Whether we pull, it might not be popular for a short time, but I just do not see this conflict trend going on into the summertime, if for no other reason other than political. And so if we see interest rates start to trend down, we could see the number of pendings and new listings actually inverse like they did just for a second here. But when that happens, now we start lowering the amount of active properties on the market, which puts us back into a major seller's market. And so this is the first thing that has to happen. You can see that all of last spring, we never got close to those two never got close to each other. Here in February and in March, we are basically pending every new listing. So that's something that I definitely think that we should be keeping an eye on. And I would anticipate a stronger seller's market as we go into April and May if that trend continues. All right, if we jump into Dublin, new listings are down 5.7%. So compared to last year at this time, again, not a good sign if we want more inventory. But we're seeing that same gap here last year, and we're not seeing that gap this year. So I'm anticipating a tighter market. So again, I guess to say what needs to be said, if you have a buyer that's looking and they like something, they should take it because the chances of there being more multiple offers as we go into the spring is higher, not lower, based on what's happened over the last couple months. All right, new construction in Dublin. Um, New listings are actually down 42% for new construction, and this is on the MLS. So obviously we take all this with a grain of salt. But that's probably what we're seeing. Some of the new listing, the lack of new listing inventory is due to lower new construction listings. And we kind of see this across the board, which leads me to believe that the builders slowed down the number of properties that they were starting to build in the fall because of the market.
Troy, Troy, is
Yep.
this that new slide with the new construction that you were talking about?
Yes.
Thank you. Sorry to
So the
interrupt.
reason I wanted to put this in here was because Olentangy in particular, the numbers were kind of really wacky compared to everybody else. And I was curious if there was just more new construction. So I did it for all of Dublin, Hilliard, and Olentangy.
Hey, I'm
So
no
Hilliard, go
quick
ahead.
question. Going back to Dublin for a second there. Is there a possibility that they're getting a little landlocked and there's less opportunities for building in Dublin right now?
There is. It's probably unlikely to be the case over such a short period of time, unless they've closed out a bunch of neighborhoods in the last 6 months. But over time, yes. The thing is, though, I think what we saw last year in the spring was a huge number of new construction listings going on the market. And then even look at this, the number of active listings was much higher in the fall. And then we've slowly eaten into those. And I think that the builders have been very reluctant to start new properties. I don't know if anybody on here works with builders at a high level and could give some insight on that. Um, I know I've sold a lot of new construction this spring, more than in the past in the spring. And that was probably due to some incentives along with the really low rates. So I don't
Mhm.
know, again, if they're selling more properties, they've definitely seemed more willing to negotiate.
Well, this will be my last comment. The,
No, keep them coming.
well, Dublin is also going to redistrict its high schools. They attempted to do it last fall and it failed miserably because people were so upset. But it's going to happen now, and the area that affects the most is the northern part of Dublin where most of the new building is going. So if you buy a new build in that area, you're guaranteed to go to what people consider to be the best high school. All the Dublin high schools are great, but of course, they've got their pecking order. So I'm just wondering if that has something to do with any of this. I think it does. I mean, there's no question.
Yeah, I think it could. The thing I would say, which isn't fair because I know what's coming next, is that this is a trend across the board with all of the communities. So I do think there are definitely some nuances when it comes to Dublin. But I definitely think across the board we've seen new construction trend off in terms of the total listings, um, since, fall.
Turning off my mic.
Um, no, I want you to keep talking. I love the interaction. All right, in Hilliard schools, inventory overall is up 45%. New listings in Hilliard March over March were up 22.3%. Again, though, look, still no gap. So you had 22% more new listings than last March, and you also had 46% more homes for sale than last March, and yet we're still eating up all that new inventory. If we look at new construction, though, we can see that new construction had a lot more new listings um, this year in Hilliard in March than last year. However, look at May last year. So it could have just been like a fluke that houses got done earlier or something. But Hilliard is an interesting kind of it is a word that I can't think of right now. Outlier is the word that I'm looking for in terms of the increase in March. But it'll be interesting to see if the number of new builds in Hilliard like continues this upward trend or if it just peaked earlier in the year. So we'll keep an eye on that. Olentangy, new listings overall up 20.6%. So I will say that as we've gone through the winter months, if we went back and looked at the old slides, one of these three markets was always kind of weird and wonky. The thing that I noticed this month and last month it was the same is the fact that we're eating up all the new listings immediately has been true across the board for the last couple months. So you see that new listings and pendings kind of staying on the same trend line. So our new listings were up 21% and our inventory was up 44%. So that's definitely interesting. And then with new construction, you can see that the pendings actually were up quite a bit compared to even the last couple months, but new listings weren't really up much in Olentangy. I don't think this is correct. 26.2. The graph doesn't really look that way. That's very
Troy,
weird to me.
Troy, I might have missed it. I dropped for a second my internet, but so what's this telling you with Olentangy? Because I've been paying attention month over month with you and Olentangy, what what are you interpreting then?
Yeah, I mean, I don't see a huge spike in new construction listings last year. I can't remember the one month that it was really off. Maybe it was September. I probably should have gone back historically. But I would say what this is telling me is that the number of in contracts pendings on new construction has gone up significantly after being relatively flat, right? Like there were some month to month variations, but they were relatively flat, like all below 40 a month. And now we're up nearing 70, just since, from February to March. So my comment to that would be that we're starting to see activity pick up. And honestly, I don't really know why why Olentangy was such a mess a couple months ago, um, when it came to inventory. I mean, some of it definitely could have been new construction, but if we look, like even starting, last July, there was just a huge growth. Obviously peaking in that September to October range of inventory, but then we started to see a drop off. And I would expect, based on what I'm looking at here, that that drop off would continue. So for some reason, maybe if anybody on here is an expert in Olentangy, if anybody has any guesses as to why we would have seen that, lack of activity over the winter time compared to other markets, but I don't see anything in the data that jumps out to me. Unfortunately, I wish I did. I would say though, Olentangy looks like it's on the mend, and moving back towards what we would expect. And then this is just resale versus new construction, really no crazy trends on the overall market there. All right, days on market is up a little bit year over year by 4 days, but the spring downward trend has begun, going from 46 down to 39. Remember, this is all based on what happened 30 to 45 days ago. So this isn't necessarily, I would definitely anticipate that this trend continues to go down. Sales price to original list price, it's 1% lower than last year, but kind of in line with normal trends. So in my opinion, not a ton going on here. This is the thing that we would need to keep an eye on. I've been kind of talking about it the whole time. Is we're back down to 1.6 months of inventory based on the sales. So again, we were all the way up to 2.4 in January. And remember, this is based on closed sales. So this is what was happening, in January and February. Um, if we don't see new listings start coming up, my prediction is that we're going to be going back into a much tighter inventory environment. And if we also see interest rates come back down in any meaningful way, honestly, when they bumped below 6%, and that was the headline all over the world, not really the world, but all over the US, um, we saw a huge influx in mortgage applications. If we stay at these levels and go back down below 6% on interest rates, just like we've been talking about for the last year and a half, as soon as everything kind of happens at the right perfect time, we could be very quickly back into a strong seller's market where everybody has to have appraisal gap coverage, no inspections, like all that fun stuff. And it would happen, in my opinion, if those interest rates go below 6 between now and June, it'll literally happen overnight, like within a couple weeks. It'll go from multiple offers to multiple offer chaos with much higher prices. I know it's already happening on some listings, but I think there's still some stuff sitting, some areas sitting. I think you'll see the biggest change in like the secondary markets. So I would consider like Delaware, um, Sunbury, like some of the like the second ring around the city. I feel like things have stayed fairly competitive in like the Worthington, Dublin, Hilliard, but whenever prices get really crazy, then the first time buyers get pushed out to less desirable quote unquote areas, probably mostly just because of distance. New construction months of supply also way down. So again, assuming my hypothesis is correct, that the builders have just kind of slowed their rate of building or slowed their rate of new construction starts over the fall uh, and early this year, just because of the softness in the market last fall. That's just created a lower supply. So again, maybe you had buyers that were jumping to new construction because they didn't want to be competitive. Um, that's probably going to get harder just based on the numbers. Average sales price. So this flies in the face of all of the last two slides. But again, remember, this is looking backwards. But our average increase in pricing was only 2.3% of March of this year versus last year. So again, the rate of increase was definitely not the same um, as it's been. And you can see really that's coming off uh, a very very flat winter, which actually this was flatter than a normal winter. Um, but we're also not seeing any huge price increases. So again, just some plateauing of prices. It'll be interesting to see, April and May are going to be more telling as to, we usually see most of our appreciation happen in this period from March until June. And so we'll know what's happening with pricing, but definitely be careful when you're pricing to not get too crazy because we're definitely seeing things flatten out. The rates of increase is lower. All right, showing data. Allison got super excited about this morning. Um, so she says she does it for all of us, but I think maybe she just loves it. But the purple line here is this year. You can see that last weekend was the highest number of total showings we've seen since 2022. Um, I know we're gonna do something with the colors. Actually, we did, and we didn't update it, Allison. But
Oops,
so it'll
sorry.
be easier to see. But the interesting thing about this year is like we added the snowstorm label, or Allison added the snowstorm label, because look at what happened to showings during the snowstorm. I mean, like we all feel this stuff, but I just geek out when the data like shows it plain as day, right? Like, so we had the lowest number of showings, total showings for 2 weeks in a row during like the snowstorm week. But then we've recovered. And now, like last week, we were the most showings of that week since 2022.
And last week was Easter, and Easter has historically been one of the lower marks on the graph.
So we go Monday to Monday. So actually, this this is the week after Easter, which this is Easter. So we were low, but the percentage change from the week before was the smallest it's been since we started tracking.
Yeah,
Oh, that's
we go Monday to Sunday, and so that dip includes the Sunday of Easter. And so the one that's going up is the past Monday to yesterday.
oh wow. Way to be on top of it, people. I like it. But still, we were pretty high for an Easter, is all I'm saying.
Yes, yeah, we
Right.
were the highest. I believe we were the highest Easter other than 2022. But it
And that's
was
not
this. Go ahead.
necessarily a good thing. Like
Well,
People,
yeah, you could go really deep with
We
that.
also talked a little bit about this morning too, is it's like spring break timing, right? And so sometimes
yes,
spring breaks fall into Easter, where I believe Columbus City Schools always follows Easter. So like when Easter's middle to late April, you're only seeing one or two school districts on spring break around that time versus the last week of March, first week of April, where spring break fell for a lot of people, also had Easter in there too. So it kind of plays a little bit on both ends.
got it. Thanks.
All right. Number of showings per listing. This kind of goes in line though with what we've been talking about. The number of listings is going down. And so the showings per listing, along with a high number of total showings. So we're right at where we were last year. I would expect if the trends continue that we will eclipse last year. Um, in the coming weeks because things were kind of falling off last year. And I think, again, based on the data, I think we're going to be improving on this graph. So, again, good for sellers, bad for buyers. All right. And another thing is, again, my teachable moment, I think, is this. Um, and if you email us for the slides, we'll include the better colored version, which is easier to follow. But I'm going to encourage you guys to print this off, just do like a clip it and then have this. You can include that too. But then we also created this for us and you guys of important dates. And so if you look at all these dates and then we go back, we obviously have them on here as well. But when you're talking to sellers about when to go on the market, you really have to pay attention to these dates and make sure that, if you want to go on the market Mother's Day weekend, you can, but just know that the activity is going to be lower than the week before and the week after. Now, you guys aren't allowed to share this outside of our brokerage or this close-knit friends because it will really screw us all if everybody sees this. But obviously, um, I say that somewhat tongue in cheek, somewhat not. But ultimately, like, these are ways to make yourself look really, really smart. And I can promise you that no one else has these because we literally create them from scratch. So when you can sit down in front of a seller and say, like, it's really important that you get your house ready by the weekend, by, the first weekend in May or the last weekend in April, so that we can go on the market the first weekend in May. Because if you wait till the second weekend, then you're going to be competing with Mother's Day. And historically, Mother's Day sees a decrease in about 1,000 showings in our overall market. Like, again, they may still decide to list on Mother's Day, but you're going to be setting yourself apart, in my opinion, as an expert in a way that they probably didn't even think of.
I also need to
So,
apologize. It is June 21st for Father's Day. Don't know where May came from, but I do have a fully updated document with this. So, like Troy said, if you ask, we'll send it over with all the dates and both graphs in one document for you.
all right. And then really quick, purchase and refinance applications are down year over year. Not overly surprising considering rates have gone up. Even though rates are lower than they were a year ago, I think a lot of people obviously got really excited earlier in the year when rates were down. Um, this does need updated, but unfortunately, I don't have an updated slide to put in here. So it's again just the same conversation that I had earlier on, and that is that I just think that our number of buyers in the market is still very depressed, and the number of sellers is still very well below what is historically average. And so if rates decrease and consumer confidence increases, which I think is likely to happen as the year goes on, we could very likely see the gap between sellers and buyers shrink very quickly. Local rental market, pretty flat still. Obviously, we're entering the busier summer season, but nothing overly exciting here with rent prices, unfortunately, if you're an owner. But definitely, we're seeing more activity and more tenants out there in the market in our property management business. So, all right, that's it. That's all I've got. You guys have questions, comments, concerns
I have a question. Did you just say on that last slide that you think that interest rates will go down as the year goes on,
from where they are now? I do.
even with the war going on?
Well, my opinion, and this is purely a speculation, my
Yeah.
opinion is that the war is not going to go on that much longer.
Oh, okay. I hope you're right.
And I could be completely wrong. I just think that politically, it's not popular. And with the midterm election coming up, it would be political suicide to extend it. I mean, yeah, I don't understand why it even happened. So maybe that's a stupid assumption to make because maybe it never was about politics. But I just think there's going to be a lot of pressure from the Republican Party to get it done. And the longer it goes on, the more the pressure is going to be. The public's already really not behind it. And so I just think, once that happens, the other countries are going to be forced to come in and deal with the Strait of Hormuz, whether they want to or not, because Europe and Asia are the ones that get all their oil from the Strait of Hormuz. And so we can argue all day about whether we should have gone in and created the problem, but we can pretty easily remove ourselves and not be impacted at a super high level. It's going to force their hand. That's my opinion.
I hope you're right.
We'll know more this week. I mean, honestly, whatever happens with this blockade,
I know.
we don't have to spend a bunch of time talking about it. But for those of you that don't follow, China has been getting their oil still through the Strait of Hormuz from Iran. Well, starting today at 10 a.m., we created a naval blockade to stop those oil shipments from going through. And so it's either going to force, I guess, in theory, as I'm speaking this out loud, maybe China gets mad at us and does something and creates a bigger problem. But more likely, I think it is that China puts pressure on Iran to do what needs to be done in order to get this done.
Yeah.
So we'll see, though. I mean, it all depends on what's really left of leadership in Iran and how much power they actually hold. I think that's probably the biggest question. Is anybody actually in charge, or are there just a bunch of people that are in charge of small pieces that have been willing to listen up to this point to whoever the spokesperson is? But it's
Yep.
definitely a conflict or a war that we haven't seen in our lifetime, something like this where it's like completely like an air war and then we're not planning on ever going in. It's just unique. So I guess me speculating is probably dumb because I'm probably going to be
No,
wrong. But
no, it's good. I'm glad you're speculating. It's very concerning. It seems to change all the time. Like I
yeah.
just don't I I don't know.
Well, the time horizon from an expectation perspective is a little bit obnoxious. Like, I don't know if there's ever been a legit war where anybody decimated the whole leadership of a country at the level that occurred, and we expect it to be over in a month and completely like, okay, yeah, somebody else just gonna pop right in and then everything's gonna get back to normal here. Like, what's for dinner tomorrow?
Right.
Like that type of a thing. But the question is, does it, I don't know. I I just think that there's gonna be a lot of pressure from the US, and I'm not sure anybody else. Well, I'm confident based on their lack of willingness to get involved up to this point is gonna get involved and keep the war itself going. The question is, I guess, does the oil production and shipping get back to normal? But I will put on the record that I think that they will start going down. I probably have a 50-50 shot at being right, but that's where my head's at.
Good. Okay. Thank you.
All right, what else? Who else has got something? Somebody else has got something. No, really? All right. Well, you can either email me at troy@marshhomegroup.com. You can put your email in the chat now. And if you
Quick
do that, then
question.
we will send you over the slides.
I do have a quick question.
Yep.
Do we track how often properties fall out of contract? Because I have these one poor buyers, they've put in four offers and three of them have fallen out of contract. They come back to us and say, do you want to get into contract now? And it's like, well, after you told me that something's wrong with the inspection, no. But I'm just curious if that's like a common
So
thing.
tell me more about that. Well, first of all, to answer your question quickly, here's the
Oh yeah.
numbers.
Okay.
We went through this last month. It's way lower than you would ever think.
Okay.
It's like between 5 and 8% historically, really right around 7. It fluctuates a little bit, but if you look over here, it's a very small
Yeah.
percentage. Um, but tell me more, just like, because I love doing this, because I think these are really relevant conversations. Why would you not consider something that has an issue with an inspection?
Oh, I mean, we did. We ended up they gave us the inspection reports on all three properties.
Okay.
And so there was something that we still felt like, they didn't want to take on either. So we
Okay.
could have gotten into that position. And again, these are first-time home buyers. These are older homes in Clintonville. So, they all end up having the whatever, structural, water in
Same
the basement,
issues.
all
Right.
that kind of stuff, possible asbestos, everything. But it's just been interesting that, I feel for these people that it's like, are we seeing this other places that, things are falling out easily. But I mean that,
I do think that I would not be surprised to see, like, when we look back historically at like the second half of last month, maybe into the beginning of this month, that we would see like a spike in contracts falling out just because people freak out, or because I mean, I have had a couple situations, where buyers, especially like middle of last month, where buyers had gotten pre-approved at the interest rates that were 2 weeks ago, and then they never checked back in with their lender.
Mhm.
Their agent didn't tell them to, and then they go into contract and they go to lock their rate, and the payment is a lot more than what they thought, right? So
Yep.
I do think if you go back and look at that like 2 to 4 weeks, I would not be shocked to see that we saw an increase. Um, but the average is somewhere between 6 and 7 homes out of every 100 fall out of contract, which is way less than what most of us think, at
Yeah,
least
that's
when
good.
I
Good to know.
everyone. Yeah. But I do think those distressed properties are huge opportunities. Um, I would encourage you guys to do your research on the cost of repairing things. It's much less. And a lot of times you can get the seller to do it because they're stressed and freaking out because they thought they had their house sold. Being the second agent in, especially if you can get non-competitive, can often be a pretty nice place to negotiate from. So, all right, sounds good. Well, you guys have a good one. Please email me, troy@marshhomegroup.com, if you want the slides. I think you're welcome, Rachel. I think Allison got the ones out of the chat up
Yep,
to this
we're good.
point.
Yep.
And you guys have a great month and let me know if I can do anything to help.
Thank you, Troy.
Yep, bye guys.